Joining me today on NYSE Floor Talk is Paul Sternlieb. He is the president and CEO at Enerpac Tool Group. Paul, fantastic to have you here. Thanks for joining me today.
Thank you very much for having me. Appreciate it.
Let's start off by talking about the company. Tell me about Enerpac, your product, and your end markets.
Yeah, absolutely. So Enerpac, the brand, is well over 100 years old. As a company, we are a premier industrial solutions provider. We're known primarily for our high-pressure hydraulic tools, and we provide services and products to customers in many markets globally. And in our growth strategy, we have four key vertical markets we're focused on: rail, infrastructure, wind, and industrial MRO.
Now tell me, what are your key competitive advantages and how do you sustain them?
Sure. So we believe we have a number of key advantages as a company that have been built really over decades now. I would say first and foremost is the strength of the Enerpac brand. Enerpac is really a preeminent player in the space and arguably a very premium positioned brand in the markets in which we compete. Secondly, the breadth of the product offering is very extensive. So we really have a full lineup of complementary tools and services to offer our customers. That's essentially unmatched in the industry from a single player. I would say beyond that, the markets we serve are very diverse, very largely healthy end markets. We're really not overly reliant on any single market, I would say. And so we're a very global player, but we serve customers in many diverse markets. And then finally, I would point to the technical and applications expertise that we have in-house within our own team. That's something that we bring to bear to help customers when they're speccing out or selecting products and technologies to get a job done in a mission-critical application oftentimes. And we have folks who can really bring that knowledge to bear with decades of experience.
Now, shortly after you joined the company in late 2021, you launched the Ascend Transformation Program. Tell me about the program and the change that it's produced.
Sure. So when I joined, we undertook probably 3-4 month kind of holistic, kind of deep dive review of the business. And that culminated, as you said, in the launch of our Ascend Transformation Program in March of 2022. So we're now well into, past 2 years of that program, and that will take us through the end of our current fiscal year. We identified really significant opportunities to drive improvement in performance in the company and create value for our shareholders. At the time we launched the program, we identified $40 to $50 million of incremental adjusted EBITDA that we committed to. A year into the program, it was so successful, we increased that number to 50 to 60 million. And then at the end of fiscal 23, we announced that we were actually well ahead of plan and achieved our targets a year ahead of schedule. The Ascend program was primarily focused on 3 areas, I'd say. First and foremost, driving near-term organic growth in the company. Second was improving our overall operational excellence in the business, in manufacturing, operations, warehouse, and logistics. And third was all the SG&A improvements, driving greater efficiency and productivity in the business. And we've managed to achieve that in all three of those pillars.
Now, earlier you were talking about your verticals. You mentioned your verticals. Tell me, how did you select them? And why do you believe Enerpac is positioned to win?
Sure. So we went through a pretty extensive process as the management team really built what became our organic growth strategy that we're now well underway in executing. And part of that was being very selective about specific markets where we wanted to drive incremental accelerated growth and put incremental focus and resource and investment. Ultimately, we selected those for infrastructure, rail, wind, industrial MRO. And we did that based on looking at a number of criteria, but primarily we looked at overall market attractiveness and a bunch of different metrics there. But all four of these markets are healthy markets, large, growing, with very attractive macro fundamentals, driving really nice dynamics over the mid and long term in those markets. And the second factor for us was, do we have the right to compete, the right to win and be successful in those markets? The good news in all four of these markets is we're already present. Our brand is known. We have existing customer relationships, but we've got plenty of runway to grow.
Mm-hmm. And finally, tell me, Paul, what comes next? And what are you focusing on when it comes to organic or inorganic growth?
Yeah, no, look, we're really excited about continuing to execute on our organic growth strategy, all four key pillars. So one of them are vertical markets that we talked about, but we're also focused on driving growth through our digital transformation program, through all of our customer-driven innovation that we're now executing on, as well as our expansion in the Asia Pacific region, which is a smaller region for us today, but where we believe we really have outsized potential for growth. But beyond all the organic, I would say, is all the inorganic. We're putting increasing focus and resource and time and effort behind growing the company complementary through potential acquisitions. We have and we enjoy a very strong balance sheet with very little leverage. The company generates exceptionally strong cash flow. And so because of that, we have access to capital to do really not only things we want to internally to support growth organically, but also complement that with external, inorganic growth. And we're focused on doing that primarily in the markets, the vertical markets that I talked about.
Great. Well, Paul, it's been wonderful to talk with you. Thanks for joining me on Fuller Talk today.
Thank you very much. Nice to be here.